The S&P 500 and the Nasdaq appear to be pulling back today from record highs, but that doesn't mean investors are losing optimism. Let's get some ideas for a portfolio strategy from Chris Kerlow, portfolio manager at Canaccord Genuity's team LWC. It's good to have you in studio. Thanks for taking the time.
No problem.
Okay, so heading into Q4, let's talk about your portfolio strategy and get your thoughts on Canada versus U.S. equities. What do you think?
Sure. So for the first time in my career at Canaccord Genuity, we've become underweight equities. You've seen on the chart that you showed just a minute ago, they're just taking the escalator up, kind of, pull back today. We're down 20 basis points. We're between Canada and the U.S. We favored international stocks most of this year, Canada being one of those international companies from a global perspective. So we are a little bit more underweight the U.S. than we are Canada, and most overweight international indices, including emerging markets.
Okay, you mentioned international. So apart from Canada and U.S. markets, what are you looking at internationally?
So we don't consider ourselves the best international stock pickers in the world. We focus on the Canadian dividend space, U.S. growth stocks, and then outsource that to best-in-class, actively managed portfolio managers who have boots on the ground across the globe and give us that expertise. We think that active management right now is another bias where we're favoring over passive management. Passive management in the past, just owning the S&P 500 has been a great strategy, but we think going forward with bouts of volatility, that's really where active management will be able to earn their keep.
How much are you allocating in bonds at the moment?
In bonds, we came up to a neutral weight at the end of the summer, and then we saw the U.S. 10-year fall from about 4.5% down to 4%, and now we're back down to that underweight. Max underweight on credit and high yield. We don't think there's a great risk-reward trade-off there, but we do hold some U.S. treasuries, a little bit of U.S. cash-like securities, to give that balance to a diversified portfolio.
Any alternatives you're looking at, like crypto, anything like that?
We're max overweight almost on our alternative space. It's kind of the new bond with liquid alts. It's really given us an opportunity to look into things such as alternative currencies. We added Solana in the summer through the ETFs once that became available to complement the Bitcoin position in our overall portfolios. We also own things like CTAs, commodity-linked hedge funds, as well as merger arbitrage is another place of the market that we thought, gives us some diversification without that pure beta systemic risk that, in a market sell-off probably doesn't go down quite as much as a broad-based indice.
Okay, so you do have some stock picks today, and we'll go through some of those. Your first one is Alamos Gold. Gold, of course, doing rather well at the moment. Alamos Gold doing pretty well as well. I mean, what do you like about Alamos Gold?
Yeah, so Alamos is expected to pick up production of about 600,000 kilograms a year in 2026. They have an all-in sustaining cost, $1,100. Gold at all-time highs here at 4,000. We actually added this dually listed security to our U.S. top picks portfolio, as we think, with that spread between the price of gold and their ability to produce it, there's some great growth upside. No debt on the balance sheet, $250 million in cash. Great opportunity to look at if you're looking for a gold position.
Down 4%, you still think it's a buy right now?
Yeah, we're still pretty much a full position in the name. I think great opportunity, down 4%.
Okay, next one is CBOE Global Markets. What is that?
So CBOE is, you talked about oligopolies at the start of this.
Yeah.
They're an oligopoly with two other players in the markets business. They're the largest options dealer in the world. They control about 50% of the derivatives market in the United States. They just made some expansions into Europe and Asia through acquisitions that seem to be doing pretty well. And because obviously people get more interested in options, and we've seen a huge increase in 0 day to expiry options as of late, they're the market leader in that by far. So it gives you this kind of like counter beta when Liberation Day took place or the Japanese yen carry trade was unwinding. Those were the two biggest options days in their history of volume and in turn revenue. But 35% of their business is reoccurring. So we like the name. They're expanding into the digital asset space as well. So nice ballast in our heavily growth tech focused LWC US top picks to have a name like that kind of level the ship when things are getting a little rocky.
Okay, last one is Freeport-McMoRan. Tell me about that.
Yeah, so we've been getting off the position over the summer, just hadn't been keeping up with the rise in copper prices. Then they had a really devastating incident in September with a mudslide at one of their copper mines. The stock came off about 30%. We brought it back up to a full weight. A little counterintuitive for the name to come off that much, so we took the fall down to add to it. If you think about this mine being one of the third or fourth largest producing mines in the world, producing over 200,000 tons of copper a day, we're at historically tight levels. I think 10-year inventory lows in copper inventories right now. So you take that mine off, it's going to sustain copper prices. Expectations keep coming in. It was supposed to be a Q2 restart. Now it's Q1, possibly late Q4. So we think they'll be back up and running in sooner than later. And stock has struggled to break above 46, and our target's 50. So maybe not a ton of room left in this one, but those are the levels we're looking for.
Copper's so critical right now when you're talking about the race for AI and in the tech sector as well, right?
Oh, massively. I mean, it's not just chips that move AI, it's electrons moving on copper.
Yeah.
It takes about 12 kilograms of copper for every megawatt in an AI data center. So the structural theme behind that has legs for sure.
Great. Well, appreciate you coming in. Thanks so much for sharing those stocks.
Thanks for having me.
That was Chris Kerlow, portfolio manager at Canaccord Genuity's team LWC.